We have 13 minutes till the market opens. Okay, yesterday was it was really not expected. So what I am thinking right now is this market is in a no man's land on a higher time frame. So what would be the coordinates? Plus this whole area from one six 523 165. Basically what I'm trying to do with these things from yesterday and today is in trading, the ideal position of a trader is to day trade a trade into a swing trade. So that only comes when you are risking a small amount with precision and you are letting your trade run. So in these type of swing trades, all of these stop losses will get covered when you catch a whole trend for 20 days. So I have so the next would be first was 123 16523.4. The next would be 65 7 1. We have 10 minutes till the market opens. Background market green. This represents the lower time frame. Next would be narrative. 164 16481 64 81.2 164 164 82.4. If anyone followed me yesterday, I really apologize. I could have I could have not taken that loss, but you know what I was doing, I saw that move happened in an hour, and right before the market opened, it was in a no shorts zone. Right from this point, it was in a no shorts. Like I was talking about all of these trades, and I maybe even mentioned that it's currently in a long, but I was not like, okay, it's a no short for now, might be in an intraday, then it can move coming back from the extremes. So I took a short. The extreme was why I divided my position into fourths. I was like, I'm gonna short some here, and then the short again in there. The market was here somewhere, no? I was like, I'm gonna short this again, quarter of my position, 25%, 25%. So I was like 50% of my position, and my stop losses were around here. So this position was having a smaller risk than that. So in all of us, in all of that trade was managed properly, but shit happens, you know. Simon Dale, hello, 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 Simon. How are you, my friend? Okay, so you might have heard me say no man's land, no man's land a lot of times. So when the market chops is in a becomes in a choppy, so you have seen me say no man's land in a shorter time frame, but this right now when the trend is at a pause, it's a no man's land in a higher time frame. So this would be the background. Be green. We have 6 minutes till the market opens. For now, it's in a no man's land, but there are buts and if today. Not, I'm gonna clear this out now. Just give me a minute. Okay. First thing is we will go to, there is something really interesting here. Somewhere around, we move to the hourly. I'm personally trying to catch some trends which which is they're going to be, if you somehow catch these trends and you are patient enough to watch it for yourself and hold it through 20 days. So that would be a very good example in your trading career, that how things can happen in catching a bigger trend with a bigger lot size, having lowest risk. This is the ideal position from a day trader's perspective to a swing trader perspective. The swing traders always have a huge stop loss. Okay, so I'm considering the swing trades in the assumed risk, the risk I'm assuming, right? Okay, so the assumed risk is not probably gonna, is not the total risk, but I'm already assuming that risk in my trades just to be careful. So if I catch a whole trend, that would set up my losses for like next 2 or 3 months. So holding trades and would be the good thing for 2024. Okay, so where is this? 401.29. 401 point. Is the stream laggy? $401.29. We are above this price point. This is what I consider the real market. So we are between two areas, that would be, the next would be 401.49. I am currently not trading, it's in a no man's land, so I'm just gonna tape read and show you what the market is going to do. It's better to have no positions than to lose money. 401.29, 401.12, a minute till the market opens. Overall, I do not want the price to go below this point. If it goes below this point and stays below, then we'll be looking to this gap to get filled. Otherwise, we have the upper gap. And meanwhile, I'm marking the points of interest. Background, middle line, borders, background removable. Sure. Plus we have that gap. The market is open. Everything is mixed up. So from this range to that range, this is a no man's land. The price can decide itself where it wants to go. If I am to trade the smaller time frame structure, I can, but that would really means that I really cannot go long nor shorts. Longs are more probable then. Just saying. Price can move to 16542, 16542 yellow. We have an opening range gap. Still no longs. I would not prefer longs nor shorts. We have a gap within a gap. So this thing happens when it's in a no man's land or a trend pause. We can clone. Longs are more probable. Can stop right now. Wait a minute. It did stop now. Yep. Haha. But will it hold? These are the, this is the We opened here. Okay, we closed here. We have some trouble right around here. That would be high of that market area which I marked. This point. Next would be, this is what I'm talking about, that it can stop here. Be 16556, 16556, slightly below 16556. Yep. If the price, this is the line in the sand for the lowest time frame. If the price continues to stay above, which was probable, then I'll be looking for longs with confirmation. This is the confirmation itself. This is the confirmation. We are stuck at the extreme of the downtrend. Watch. Gets recognized, but if it invalidates, that means it's not respecting that. That means things are getting broken. This is what I'm doing. This is, once we go above this point, no longs, no shorts. This is what I'm doing. If I were trading, I'm not trading much. First 5 minutes closed. Is this visible? I don't know if it's visible or not. No. Oh, okay. Yeah. No man's land is full of knives, full of Sam White ही बजाने वाला सब bro. No man's land is full of traps, full of landmines. So this is, I have seen it many fucking times. So this is why I don't trade personally in these conditions. But still, it can move up. It's getting a strong, it's stopping at a very good place. Watch how everything is playing out. Not only this, if we move to this point, then we have the regular trading hours somewhere around here. So can gyrate around this point. Again, my God. Even in a no, this can stop here. It's allowed to stop here. Can take rest. Can. Oh, there we go. Everything that can get tapped will get tapped. In these trading environments, I'm really not allowed to trade this. I'm going to tell you for 1, 2, 3, 4, 5, 6. Stop. This is the lowest point of the range. Can fight here, fight here, fight here, probably break. Probably, matlab, in a sense, when it's in a no man's land, I can have a guess about 60% guess. I would consider it a 60% guess. One side has more probability over the others, which is for now upside. For now upside, okay? But still, it's in a no man's land, so I'm not allowed to trade. This is as good of a guess as 60%, so it's not that good. So for me to get confirmation, it needs to go above this point. Meanwhile, I can tape read it like with precision, and this is not the ideal. The next 5 minutes is about to close in 30 seconds. You see, this is really interesting. This is interesting. This is the real market. This is interesting. Why is it interesting? We go to the hourly chart. Hourly chart. You see this? You see this? This candle. I'm going to show you. This candle is what you say imbalanced. Wait a minute. I think something is not right with not charging. Oh. Yep. Okay, I'm gonna show you this on a minutes chart. Minutes. Completely imbalanced. It's a completely imbalanced. Not even on the minutes. It didn't even delivered on the minutes. So this becomes interesting. This is the new 5 minutes candle which we are getting the reaction from. The first 15 minutes about to close in 3 minutes. To the upside. This is the new 5 minutes. 3 candles into the 5 minutes. Boom. To where? Currently, while in a no man's land, I'm using just the structure, the smaller time frame structure. Imbalanced. Yeah. Yeah. Both sides. Everybody's gonna get. The first 15 minutes about to close in 20 seconds. This is the new 15 minutes candle. Keep in mind, every 5 minutes, every 15 minutes, there is a cycle. Wrong side to the right side, wrong side. Even in a no man's land, even in this storm. But if I am making a narrative for myself, I would not want the price to go below this box. This box is red, right? This box is red. I do not want the price to go below this price and find support above this point. That is the whole, that is the market. That you can say is the market. There is no, like, nothing is better than this. I haven't come across anything that's better. You're gonna see what's gonna happen here. Probably, if it gives me a confirmation, we are going to get a reaction from this line, for sure. But I do not want the price to go below this. That would put more weight on the bear side, and yesterday day would become, what would it become? Irrelevant or orchestrated. I hope I saved some of you from this chop. The ATR, this is the ATR. The ATR exactly expands at 9:30. If you backtest the ATR on 15 minutes chart, using the 14 period ATR or any other ATR, you will see the more you short the ATR period, the separate, in a sense, you are using the 14 period ATR on the 15 minutes time frame, you will see the market, the ATR drops exactly. I don't know why, but exactly at 9:50 it drops. So then it moves to the real direction. But you will see it if you are back testing. You will definitely see it. You will be like, how is it? Why does that happen? This is why I don't prefer in the no man's land. It's like 30, 20 points. I can scalp this, but catching a trend is the best thing. Getting a good entry, catching a trend at the right time. Silver bullet in the ATR drop. It's 9:50. There's a larger. These lines are not standalone. I am just, when I have done all my analysis, this is the end results for just to visualize. I'm not using this to make or not putting weight on these lines so much. If we regain this territory, we can expect this price to move back up again, but we are below that price point. Then we can expect that price to move back to this line, or that regular trading hours, which I have marked the real market on 401.29. Ultra plus trades. I don't trade futures. I trade futures. I am using this price because this goes way back. I can backtest and all of this. So there is a difference. I'm using this capital on the capital.com. If I'm using IXT, any other index, so the price would be different. I'm just using this chart for this stream. I'm using a lot of other things. This is another system which I'm using for streams only. This laptop which I'm using, which is for stream. So this is just for the streaming. I'm using for reference point in a bit. Territory regained. Can we get it? 401.29. It's 750. It's 954. Got rejected again. So highly likely we're moving. Highly likely. Okay, we are gyrating within the. Yeah. But we can get to this point. 401.29 is probable. Then first, hey, listen, nah, this is just too far sighted. 55. This is the new 5 minutes candle. You're gonna chop. No longs, no short, no man's land. It's basically it's let the market tell me where it wants to go, then I'll make a bias. Meanwhile, these are the points of interest which are getting respected. Sometimes they does, sometimes they doesn't. It's a no man's land. So aka Chop City. $56. Watch this. 3 minutes. Long wicks. Territory regained. You see how we are chopping back and forth. For me to be interested in longs, these are the 2 points the price needs to go above and stay above. Not interested in longs then, okay? So what are you interested in? I cannot not short the time frame. I cannot short because of this. Can I go long? Yeah, probably if the price moves within this point. The higher the risk. If it moves with a good confirmation, I can go long. Yeah, for sure. Problem. See this? Imbalanced. See this? This. Is this a fake out? This is a guess, not reading. This is a fake. Can be. Cannot be. So 50-50. When I'm presuming or I'm assuming something, I'm going to tell you what the probability is. So but this can be looked at it from that point. Nope. Next up, we have this. It's all over the place. Longs are more probable than now, once we are between this 50%. If we are in between this 50%, longs get more probable. It's a struggle for the market to go below this green box. We can have some sort of trouble to the downside, this area of interest for the downsides on a smaller time frame, but that can get disrespected easily. So it's layered upon trends. So when 2 or 3 time frame contradicts with each other, more often than not, it's in a range. So in the range, that is an early indication, which I call it as the no man's land. I can make an argument for bulls for now, longs for now, shorts for now, but yep. You know what's really anybody who is watching this stream, the only thing which is to the importance, the most valuable thing, if you just mark this 401.29, just let it be there. It's a gauge. Once the price is above this point, the market itself is in a bullish trend on a higher time frame. So that would be long term long, short term short. Yeah, it's stuck. And more best thing about that line is it's precise. It's accurate to the fucking tick. Okay, this is the new 5 minutes. Well, this was a reaction from the new 5. This is the new 5 minutes. We are 3rd minute into the 5 minutes. Longs are more probable. We are at the 50% of this box. Longs get more probable, but the risk get increased. You see this? The assumed risk, which I'm assuming, not the perceived. Perceived is the news risk, which is more often than not delusion. It can be, cannot be, it depends on, it's really subjective. But what I'm assuming, a lot of different problems within the trend, and I'm gonna take the whole of these problems and I'm gonna assume that as risk to the opposite side from which I'm trading. For example, if I am bullish now, I would be taking account into that price line which I have told you earlier about, that price line 401.29. Okay, see how it's precise it gets. So my stop loss would be, please, I'm giving a framework for what I am trying to achieve this year. I have these systems which can exactly tell me when the trend starts, when the trend will finish, and I can hold these trends for like 20-30 days. But if I'm taking a trade here, my stop loss would be below this. Would be the assumed risk. I'm assuming a huge risk, but that does not mean that the price cannot come down here or can come down here. So in these scenarios, I'm going to divide my quarter of my position from the prices here, because what if the price doesn't come back, and if it's moving up into my direction and I feel fucking FOMO, then what I'm gonna do about it? I'm gonna jump in No. So it's like, okay, the price is away from this area. I'm gonna enter a position here. The largest risk would be for the position entered here. The more the price comes close to this point, all of these stop losses would be at this exact same point, because the validity of that narrative would get invalid below a certain point. So I'm like, okay, once here, once here, once here, once here, to all of these stop loss, but the last, which has the last trade, which I, for example, if I'm taking the last trade at the real market, this trade itself would be the largest of the amount in the lot size, and the risk would be reduced. You see this? Okay, watch how it played out. Fuck it. This is what a no man's land is. This is what foresight is. Like, would be the fake out, can be the fake out on the electronic trading. This can be. This is what I'm talking about. This would be the fucking fake out, and we would move to the 401 plus. If it happens, that would be really amazing. I'm going to, like, it's 10:05. This is the new 5-minute candle. At 10:05, if that happens at 10:05, I'm telling you, okay, it's gonna. But just okay. If it comes here, we are going to get a reaction. So this is a foresight. We're still fighting fucking. Nope, up. Has more probability. Up. Can break this now. Can. Within the next at least 2 minutes, if we stay at this point, we have a high probability of breaking to the upside, back to the at least the 50% of the opening range gap. 6. Or we can just chop around. I'll not predict anymore. I'll just let the market decide what it wants to do. Seven. Three minutes till the macro ends. The more it stays here, the more likely that we break out. Yep, we are going to break out. It's probable. Good job. Yeah. Territory regained. Do not want the price to go below again. back. Do not want the price to go below this level again. There we go. The territory from here, this box is slightly down. Right at the right, slightly top. Yeah. Above is heaven, safe haven. $10.10, the new 5 minutes. There we go. The least can do is the consequent encroachment. We have a huge fucking gap. यहाँ जाने के बादल सारी उम्र Yep. You know what? This is good. For bulls, this is really good. This is the assumed risk now. This is the risk I'm assuming, this box, the whole box. This is the long-term perspective. This red box, the coordinates, I do not want the price to go below this point again. That would break the uptrend. This is the continuation in the uptrend. That would break the backbone of the uptrend, which is in a transitioning phase, which started yesterday. We are transitioning again. So in the longer term perspective, I do not want the price to go below this red box that is still bearish. We are at the consequent encroachment of close to it. Yeah. The next 15 minutes is about to close in 2 minutes. This is the end dog or the previous day close. If the price stays here for another 30 minutes, then I'll be interested in longs again. This is still not, totally out of question. You know what what the sexiest thing is? We are continuing now. We are continuing and we are above this price point, this line. This line is everything. This is the back. We can continue up to the short term short. Yesterday, our validity of the trade was okay, if the price moves above this price, it was somewhere around here, okay? So we moved above and did a closing above for 2 days. I told you yesterday. So that can move us back to the, yeah. See this broke out. Okay, so we can take out the highest high, plus the next thing I am looking for is I'm interested in is, you see this gap, if we fill the gap today, because the price is has expanded its range in recent days, it's like going 300-400 points, so can be expected in these days. This would be the gap and the previous month's close. It's really interesting point, but in a longer time frame. This is the new 15 minutes candle. You opened. No shorts, no shorts. Completely. Now I can say no shorts. Obviously, if you were following me throughout the logic, you would have known. Okay, fuck. You already know that no shorts. That was the problem. It was in a no man's land. Now we are above no shorts. New 5 minutes candle. Who is watching the stream? Can you comment? Still watching the stream. Hello, Steve. Hi there, buddy. Saad Vaiti. Hello, hello. It's obviously no shots. So, what is the thing that's going to make it more valid and more probable for the continuation? I want the price to stay above this price point at 830, above these and above this box, that this the safe haven at 830. So 830, so that would become the low of the day. We can buy the retracements. But if the price gives me a closing till, you can say, if it stays here, stays to the extreme relative to these points, relative to the line and sand, you can say, understand, and give me a closing of higher time frame. You can think a higher time frame would be in the intraday an hour, at least in our next 1 hour. If it gives me a closing. You're welcome, Steve. Steve, you have any questions regarding anything? I'll help you out, bro. So, Steve, this is a complete system which I have built in like 4 years. I'm a researcher. Matlab, by nature, I'm a researcher, and my mind works like an engineer, and I'm hyper curious, like hyper curious about everything. So this is how I made a system. I have literally, this is, you won't, you will see me doing things which you haven't seen anything. This is not ego. This is just a scientific brain speaking. But you will see me catch those trends with so much precision that you will think, yeah, this is something else. And even I am amazed by the system I've created. So it's like extremes are through the system. It took me a really long time, and it's some subjective, some objective. It's hard to explain. Hey Robin, I have a trade in earlier, but gets affected by. I usually sell too early. Robin, I had the same problem which you had. It comes with screen time. It comes with screen time. And the more you back test, plus whenever you are afraid now, that your time perception, you don't really realize. Yeah, you don't realize how the time perception gets dilated. There are two times. There is an analog time, which is outer world. In the outer world, the clock. Okay, and then there's our subjective clock, which is dynamic, and the external clock is external. The outer this clock is objective clock. So whenever I am afraid, my time will get dilated, because whenever we are in danger, our mind perceives every time, everything, like it's expand itself. So whenever you are in a trade, this happens. So it's like when you set up a chart, set it and forget it. That's the best thing. And back testing, plus keeping, you see me doing this again and again. 5 minutes till the 5 minutes till the 15 minutes close, 30 minutes till the wo close. So this is the reference point for my perception. Okay, it's not too late. It's just the first hour of trading. We are in the first. So I'm always keeping track of time for myself. This is why you don't see, you have heard there are no clocks in the casinos. So if you track time now, by take one, there is a downside to it, that you are staring at the chart while you are in the trade. Okay, if you're not day trading, if you have first you have placed a trade, you cannot change anything in the trade. Then if you want to trade, for example, if I set a trade here, okay, these are my rules. For example, if I set it a trade here, now that it's going into my favor, I'll feel for example, this is not real. I would feel okay, I should have bought more, and I cannot buy more. I cannot move my target above. I cannot move my stop above. For me, I always say this, you should have thought of it earlier before entering the trade. Once the plan is set, you cannot change the plan in any fucking case. So if you practice this again and again, so you will really overcome this thing. Kim. Hi, Kim. Understanding. Do you see your precision? Yeah. Steve, I see my precision. Like you have seen it. Yeah, okay, I've drawn it. Do not want the safe haven to get destroyed. That would put us back into the no man's land, and the fuckery will continue. So this is the line in the sand for the continuation of downtrend, or back in the no man's land. Currently, when the price is above this price point and it's above this green box, I do not have an argument for the bears. If we move below this price line, I would definitely have an argument for the bears. You have seen this plays out again and again and again and again. The next 15 minutes is about to close. In 20 seconds, that would be 10:30. And one thing more, I'm going to share something about the 10:30. You know what 10:30 is? What 10:30 is? Why 10:30? It's 10:30. Any guesses? Hello? Anybody here? So if 10:30, uh, using the same logic, you see this 1 minute candle to the wrong direction, then to the right direction. When you are using the 10:30, why not 10 o'clock? Why 10:30? When does the market opens? It opens at 9:30, bro. So when I say that two daily candles are overlapped onto each other, this is what I mean. I'm sharing everything. You see this? This is the first hour closed at 10:30. Every hour candle closes separately on the regular trading hours and on the electronic trading hours. The two daily candles are overlapped onto each other. And you have seen why I'm gonna decode everything. If you have you ever heard the break starts? When does the break start? The break ends 2:30. 1:30, 2:30. 30s are important. So you see this. So whenever we are at the end 30, the first hour. So this whole period is just like a 1 minute candle. It moved to the wrong direction, then to the right direction. Right here it closed. The first hour closed here. And then we get the moment after the 10:32, we are opening in the new hourly candle on the regular trading hours. It's just decoding ICT. Plus this, like the decode I did on, we are coming back, right? Oh no. Okay, so why I'm saying oh no, let me show you why I'm saying oh no. It is slightly above 16556. 16. Yeah. Next would be 16551. 6551. You get it now? Okay. The way I'm treating the 1 minute chart, the wrong direction, the right direction, the imbalances. This is an imbalanced candle. Haven't delivered to the upside. It will get delivered. So the other decoded, I decoded it, was the close. It's not the end VOG. It's not the end dog. Opening range. It's not the new week opening. It's the previous week's close. I might not get precise. We can draw a whole gap when it becomes relevant, but it's the closing prices of every chart. It's the closing prices. The end dog is just the previous day close. The end VOG is the previous week's close. Plus the whole gap. The gap becomes the have you ever heard the term volume imbalance? Where is it getting imbalanced? For suppose if we have closed somewhere on the weekly, and then there is a gap. So what does the gap refer? From the close to the where we opened, there's a gap. From close to close, there is a gap. So that gap would be the end VOG, and the price refers back to the end VOG because there was a gap between these closes. So the price refers back to it and moves back to that. So in the coding, how can the price refers back to something? How can the price have an idea where thing would be, where it has been. It only determines it through time. There people argue about time now. The close is the time. The time is the close. Validity only comes with the close, nothing other than this. This whole market is the close prices and the close prices, and this is the general market width. Close prices, if I draw this close line, if I just draw this close line now, so that becomes the real market, but without the ATR. So it's a higher time frame close within the lower time frame close. So this is how the market really works. This took me really fucking long time to, like, it's took me really long time to, it was around me all along, but I never knew, okay, what does that even mean? If I'm using the N dog or the N vog, why am I using the N vog? Why the N dog? And if there are N dog and N vog, there must be an N mog, the month opening gap. So here we are. We have the previous month's close, and if the price becomes relevant, we are drawn at the whole close and the open gap, and you'll see the precision. So I'm basically, Steve, I'm using 3 systems overlapped onto each other. The one is ICT, and the part I'm sharing with you guys is ICT. See this? That was the argument for the bears and got fucking. I told you, okay, this is a safe haven. We can tap back into this point and. Majority of the I really see people talking about, okay, they know stuff. They use the borrowed words. Majority of the people use borrowed words they don't understand to just look fancy, but you don't. Majority of the people fool themselves, and what they do is they'll use some sort of a fancy vocabulary to justify what they are investing on. Does it make sense? They use vocabulary. Oh, it's IPTA. Oh my god, fuck it. Must be sweet. It's IPTA. Oh, it's pata nahi kaun sa. It's like, no, it's not. Come on. It's institutional order flow entry. Oh, come on, man. It's just a wick. It's a close pricing. Yeah, Steve, if you want to see the naked chart, it's the close prices. But I'm going to tell you, okay, if I were to continue again, if I have moved in a natural progression, I've moved through natural progression. For example, if I take something seriously, I do it. Like, I am fanatic about it. So I understand what IC talks about, the OCD or anything. Okay, so it's like I moved into this direction that was closed. Okay, so I collected something from these points. Then I moved into straight to the right without watching left, right, or center throughout my trading career, 8 years. Then I moved here, and I've collected all of these things. So it's a hero's journey, a whole complete journey. Then I realized, okay, the whole system which I was using was not working, but this was working, that was working, this was working. And when this was working, that was. So it's a very, very, very long journey. And if I were to teach it to someone, I would just say, okay, use the close prices, the opening range gaps get refilled again. I had all of these noise along with the real things. So everybody use volume imbalance. Okay, I also use volume imbalance, but I use it on monthly, nothing else. See, I declared when I was here, it was here like a no. no shorts. So just to make it clear. So really. So yeah, I was talking about the naked chart. So if you wanna, if you are using just the close prices, would look like something like this. Okay, but in the meantime, there is ATR with respect to time. With respect to time, this is the first hour closing, and the theory is in the intraday, it's 88. This is the DR what I'm talking. Okay, so it 88% of the time it does not move below the low of the day if the this is the first hour, the 10:30, the first hour close. We usually have the high or the low of the day at 10:30. So we would think, okay, this is the high or this is the low, but we don't know yet. For example, if we are here now, if we are here and it's 8:30, okay, I would presume we already have the high or the low of the day. Where the high or low of the day is coming from? The high or the lower of the day is coming from the first hour candle, man. So you okay, so it's the first hour candle, okay? So if I'm back testing that thing, everything has to be back tested. If I'm back testing that, I will look the regular trading hours at the regular trading hours, and I will see for myself, okay, this was the closing. This was the closing. Okay, this is the new open. So this is the 8:30 point, 10:30, 8:30, 10:30, yeah, 10:30. We never came back to the high again. So this is again. This is what? This is 10:30. The next candle. So you wanna be smart about backtesting. You wanna know what you are backtesting, how to backtest, and how to think about it. So if you are, people say backtest first hour, they won't tell you this is the real market. They won't tell you why at 10:30. And anyways, so you can backtest this like this. This was the first closing, and we got we tapped it again. Yes, we tapped it again. So this would be the 20% of the 88%. Okay, so you can backtest it back further, but that doesn't give you a bias. That's just something which has its own weight according to the narrative. So narrative is important. It's really complex. If I wish I could teach you in a session, I will. But the close pricing are the real deal. Anyways, I think this is it. Plus no shorts. You're welcome, man. You're welcome. It's okay. I really appreciate if you guys ask any questions. Plus it's fucking free, man. I'm just giving you my research and everything. And I'm gonna decode you things that you won't really. You know what is really good? When you move through all of these things now, the moment I see somebody speak now, the moment I see he speaks, I'll know he's full of shit or not. I swear. And I can just see he's profitable or not. This is not ego, just once you get to a certain level, you'll know. So majority are full of shit. Okay, guys. Thanks a lot.